So, congratulations, eh? Now that you have finished signing on the many dotted lines, you are officially the proud owner of your house on the hill. We are very happy for you. And if you've been waiting for the other shoe to fall, we can help with that. Wink, wink. There are a few things that happen after close of escrow that may surprise you. Let's discuss. We have spent some quality time this month helping you become a savvy consumer and informed home buyer. But wait, there's more. We're sharing 10 pieces of information, which say, sure, not earth shattering, but I do think it will be definitely good intel that will help you create a plan for your next steps after you get the keys.
So pay attention to this opening line. It's kind of interesting, but it's true. The more that I engage with, different clients for different things, or we just have conversations with people, but home ownership is really adulting 101. And you would say, what? Well, it's like adulting 101 on steroids because when I think back over everything we've talked about, all the things that go into the decision making. And then when you live in your home for some time, you think back to that time or you think back to, okay, what do I want to change? Whatever. So buying your home truly is an amazing accomplishment. Oh, I mean, I I, I can remember how it was for me in this home. Wasn't my first home, but I can remember this was, so I would say this was my dream home. And, so for some, it's the beginning of an important, well, I think it's always beginning of an important chapter of your life, even if it is your second or third home. As I look at, kind of what other people are doing, just, friends or whatever, or listening to some clients' reviews or something like that. But it is a good handle to get a it is a good idea to get a handle on issues that may crop up in your financial life so you can plan accordingly. I really hope that you have found what we have shared to be valuable because I can tell you, nobody told me all the things that we have talked about here. So, are you ready to learn about, excuse me, 10 good, bad, and maybe a little surprising post-escrow closing sides of buying a home? Yeah, you thought you bought a home and you were done, right? Well, okay, life happens. So first and foremost is really a great one, I think. Your credit score improves. I mean, who doesn't want that? Funny, but not funny. But homeowners are actually considered more stable and better financial risk than your average renter. So enjoy the score bump. And let that marinate for a minute because I think about people who I sort of feel like, my, why are you putting all that money to a rental when you could buy because of this one thing alone? I mean, there's other things, of course. How about this? Number two, you can't pay off your loan early. You might not think so. You might have just, had that afterglow moment, and then you thought, oh my gosh, I'm going to have this around for how long? So, sure, it is easier said than done, but most fixed loans are amortized to be paid off via scheduled payments over the period of the loan, say whether it's 15 years, 20, um, 30, and maybe in some places I heard I used to have some people that I worked with who lived in California. They had longer years, and I'm thinking, well, with those kind of cost of loans, I could see why. So that said, there are several ways you can pay the loan off early from bi-monthly payments. Now I've looked at that, but I was like, or potentially periodic lump sums, like you get a bonus or something. And so you go and put that down on your house. or maybe even a tax refund. So remember, we're the people, this is about business and your finances. So that's why we, talk about all these things. Or even just a few extra dollars a month towards the principal balance. So for me, that is how we did it. Um, I'll come back to that after I, talk about a couple other ways or things that play into this. But you must specify that any extra money you send is for the principal only, not additional interest. You have to be clear about that. So this will save you a lot of money on the interest over time. And if you really pay it down substantially, you can recast your loan, which in turn reduces your monthly payment. So let me explain what that means, because if you never bought a house or maybe you just bought the house like we're talking about. But this means where you make a large lump sum payment towards your principal balance, okay? So the lender will re-amortize the loan, spreading the remaining balance over the rest of your loan, original loan term. So this is a way of lowering your monthly payment. Okay, so the term is still the same, the interest payment is still the same, but just by putting down, say, $5,000 or $10,000, certainly that's going to make your payments lower. Okay. Um, Otherwise, like I, for myself, one of the things that we would do is, okay, where are we in our amortization schedule? So that was one of the things to consider. First, we did a refinance, and I can't remember at what period of time, but to, lower interest rate, we did a refinance from 30 years to 15 years. And then we added, I had a set amount to put on the principal because if you look at it, you really need to look at it both ways. Bi-monthly payments, remember you got some other costs built into that. And that may or may not really, you know, bump the principal as much as you would like it to. So I figured that we were doing better by just putting whatever the set principal amount was. And when you get the what's the end of the year or whatever, it's just a nice kind of little surprise. Say, yes, we're on our way. Okay.
Well, I didn't know that, but okay. I mean, all the things. Why am I learning all my lessons late? I'm just gonna throw it out there. Okay, okay, okay. No one has to be depressed but me. So, three, your fixed loan payments can actually increase over time. This was a nasty surprise to me. Talk about a
Mhm.
surprise. I was like, wait a minute, why does my loan payments keep going up? Well, listen, I know this comes under the heading of exceedingly frustrating. So true. However, while the loan is in fact amortized on a scheduled payment, it's only the interest rate that is fixed. Now,
Mhm.
if your payment includes PITI, which is your principal, you got to pay down the loan amount you borrowed, the interest, how much does it cost you to pay for that loan? Well, you also have your taxes and your insurance. That should be four, folks. PITI. And so, what does increase in that little four-letter acronym is the cost of homeowners insurance. Now, there's a nasty headline every 15 minutes about the insurance these days. And
Mhm.
drum roll, please, your annual property taxes. Ugh.
Mhm.
And that in sunny California, man, I'm telling you, that is not a beautiful thing out here. So each year, your lender will analyze your escrow, which is, again, you pay that principal and interest, but the taxes and insurance are escrow divided, throughout the 12-month period. So how much will they estimate that your taxes and insurance are going to cost? And that's why your payment changes, even though got a fixed loan. Well, yes, you do. However,
Mhm.
this is the fine print. So anyway, so your lender will analyze your escrow, and if there's a perceived shortage, you may have the opportunity to pay the lump sum. They will send you a letter and say, "Hey, this is how much you owe. We're just going to increase your payment." I'm like, "Can I just pay it off?" timing, my dear, because people who don't open their mail and then it's like, whoops. So anywho, I will tell you that when I bought this house, I'm so not in love with my lender. What happened was they calculated my payment based on the supplemental tax when they recorded my monthly payment. So when I applied for the loan, they told me it was going to be, I don't know, 2,300 or something. And then when I got my first, it's not a coupon, but anyway, the notification on, the loan closed and this is how much you're going to pay, it was 1,700. Why, yes, I may have done a cartwheel or two. I'm like, oh my gosh, my loan went down. I didn't know enough to ask the question because I was just like happy to have less of a payment. So, not so thrilled. However, and the reason they figured it out is because when I got my supplemental bill, which we'll talk about in a hot minute, I'm like, hey, these are all the numbers. What? And they're like, oh, my bad. We used the wrong number. So now you have to pay an extra $500 a month.
Mm.
We were not amused. I'm here to tell you, we were not amused by that. So, yes, fixed interest rates. We do recommend those because you do want to know what your payment's going to be. Just know that at the end of the year, once they do the math, they're like, whoopsie, we didn't pull out enough money for your insurance and taxes. So you get to pay a little bit more each month. I do not enjoy those pieces of mail, but I'm just going to recommend that when you do get that end of year escrow, I think it might even say that on the envelope. I don't think it does. Maybe it does. But make sure you open those end of year letters because even though you think you know what your payment is,
Yeah.
uh, it might be changing. So that's what had happened, and we were not amused. I do not enjoy my mail from my lender. As a matter of fact, can't wait to get out from under this lender. So, anywho, but wait,
Mm.
you receive a surprise check in the mail. Listen up. The flip side of an escrow shortage is the rare occasion when the escrow analysis reveals a slight overage. That actually happened more so on my rental than my primary residence. And I'm like, excuse me, which one am I paying more for? Well, my primary residence is in California, so there's a hint for you. I'll tell you which one I'm paying more for. But still, my rental people seem to know how to do better math. They can use their calculator. And I would generally get a nice little couple dollars. Nothing to write home about. It's just nice to open some mail and not have some bad news all the daggone time. So sure, you'll get a little small check for the amount that you overpaid. And I'm here to tell you, well, I love those kind of surprises. Thank you. Yes, I do. Oh my God.
So, if I may,
I know she's gonna
you
say, but let
know,
me let you get the words out.
you know,
Yes, I do. Yes, I
it's,
do. Go
when
ahead.
we say small check, it's like I don't know, it's relative, right? So that was my first thought. I'm like, well, we've had a few, and what I want to say I would do with that, yes,
Mm-hmm,
it is a good surprise,
mm-hmm,
but
mm-hmm,
my advice is always to put that back on your principal.
mm-hmm,
You were paying that anyway,
mm-hmm,
so put it on your principal.
mm-hmm.
And now you paid yourself. So just saying.
On the other hand, because I knew she was going to say that, yes, see, because we have known each other for just a few minutes, and so I do know what's going to come out of her mouth on occasion. I could also say that depending on the ship, maybe you buy some investment with that. So you got your six in one and a half dozen in the other. That is both ways of paying yourself.
And
Um, so
good tea.
you have two pieces of advice to choose from, gentle persons. So anyway, number cinco is condos can have hidden costs beyond the HOA dues. Now, I feel like I'm going to say a lot of people, that sounds like a generalization, buy a condo because yes, they are cheaper and they are or can be a good way to, begin your real estate journey. And you're looking at the prices, and sometimes those photos make the property look good, and you're like, I could do this. I
Yeah.
don't want to cut my grass anyway. So and once upon a time, and I don't know when that happened, there was a switch that got flipped because HOA dues did not used to be horrible.
Oh
But
my
these
gosh.
days,
Yeah.
HOA dues are almost as much as a regular mortgage payment. And I'm like,
They
who
really
are
are.
these people and why are they sticking their hand, not in my pocket because I won't buy another condo. But I'm saying,
Mhm.
I
Yeah.
look at that and when I talk to my buyers, I'm like, look here, okay, I just need you to know, look at that HOA. You got your payment? And then you have your HOA dues. That can you afford both of those together because they will be there for the time. And we just talked about your regular payment going up. So, there are some considerations, gentle persons, but wait, there is more because so HOA dues, right? When you buy a condo, you only really own the airspace inside your unit. That sounds so weird, but that's a fact.
Mhm. Right.
Each condo owner is assessed a prorated monthly amount to cover the cost of property management. They do have to have someone take care of the grounds and the paperwork. Uh, so property management, landscaping, building maintenance, and all the things that, you know, the building, your, what is it called? Your boiler or hot water heater, plumbing, whatever for the common areas. They have to take care of that. So you pay, I was going to say a small monthly amount. You pay a monthly amount. I'm going to use that word. I'm not using the word small. Now, however, it is the latter, the maintenance, that can get you into trouble, such as deferred maintenance or large capital project. So if this happened, each condo owner will then have to pay a special assessment on top of their HOA dues. In addition to, so I'm gonna say, I got a story. That is what happened to me. That was
Mm.
so after I sold my post-divorce house that I am still kicking myself for. You didn't know. When you're young, you don't know. But anyway, so I sold it and that's when I bought the rental and my condo. And the reason I bought the condo was because they had enclosed the balcony. So I had an extra room. I bought a one bedroom. I was trying to be responsible. Every time I try and be responsible, it doesn't work out. I'm just here to tell you. Anyway, it was a cute little condo, and I did all the things. I had some silk on the walls, and I had this and that, and I made it into my exercise room. My neighbors downstairs were not amused with me running on the treadmill 11:30 at night, but I digress. Anyway, they decided this property, it was not a new building, but it looked good enough. And, we did all the things. It passed a VA inspection, which is a little bit, I didn't even talk about that, a little more onerous than a quote unquote regular home inspection. The VA at least asks for more since they're going to guarantee the loan. But anyway, back to the uh, current episode. And that is to say that they decided that they needed to redo the siding. I think this was a 4 or 5 story condo building. I don't remember how many units. So based on how many bedrooms your condo was, that's how much your assessment was. Now, I already told you I had a 1 bedroom condo. They wanted $27,000 from yours truly. Let's agree that I did not currently have $27,000 in my left hip pocket.
Mm.
But worse, whoever built that enclosure that I bought specifically for did not get it with a permit, so they flat out tore that down and they restored it to its quote unquote open balcony. So I was robbed twice. This was my worst experience.
I remember that.
It was a
I
learning
was really
experience.
grieving for you way over here in
Girl,
Ohio.
I'm
It's like
telling
I just
nobody, do not buy a
it was
condo.
like, oh my gosh. I know that was the horror story for me. Enough.
I'm
It's
not
like, wow.
California. Anyway, so that's just my cautionary tale. I guess I will just say if you decide to go ahead and buy a condo, you have been warned. Okay? Okay. Things happen and you just need to be aware. And that's all we want to do is we want you to be aware. And so let me just give you one more awareness because I got all the bad news for you. I have done all the terrible things so you don't have to. I'm trying to save you. Supplemental taxes are not your friend. Now, we've talked about this, I know, many times before, but it's such nasty sticker shock. I just think it's worth mentioning again because it can be a very unattractive amount, aka very stressful hit to your budget. And it always is. Fan myself. So when ownership of a property real estate changes, the county assessor, well, they got to get theirs because they got to pay for the public roads and the, water service or whatever they want to tell you that they're paying for. Listen, another detour. I'm sorry. When you get your property tax bill, it does itemize where your dollars are going toward. And God dang it, I got all these secrets. So, not secrets, but aha moments. And I'm gonna
Mhm.
come back to the point. But anyway, when I bought this house, and I think my previous house, anyway, when I bought this house, they kept asking me about the HOA dues. I'm like, I'm not in an association, a planned PID, planned unit PUD, planned unit development. And so those are some neighborhoods have certain CC&Rs, codes, covenants, and restrictions, like tell you what you can and cannot do at your house. Who
Mhm.
knew? So many look, That's like 12 and 15. I already told you right there. But we're just going to keep it to 10. Anyhow, anyway. But it did say on there $10 were going to HOA. And I'm like, I did not know there was an HOA because I did not get any bylaws. And my realtor definitely never mentioned anything about an HOA. So how was I supposed to know as a consumer? Well, because I'm a real estate agent. Read the fine print, Larisa. Anyway, so read your property tax bill. It will tell you that why um it will tell you where your dollars are being spent. Back to the matter at hand. Okay. When real estate ownership changes, the county assessor reassesses the value of the house, which generally increases over time because, especially if it's been decades, like if someone bought this house, maybe it was the original when this house was built, maybe it never got sold until I came along. That was, I don't know, 20 years after the house was built. So that means that from the time the house was built, for example, and then the time I come along, there was a very large amount of increase. So now this was the old value. This is the new value. You get taxed on the higher value because the county wants theirs too. And
Mhm.
you are then billed a supplemental tax, which you must pay out of pocket, separate from your monthly loan payment, my darlings. That is what this episode is about. All the little checks you're going to have to write along the way. So, anyhow, I cannot remember why, but I actually got billed twice. I got two supplemental taxes, and I did actually pick up the phone because I do not love the phone, but I picked up what the hey. I just don't remember what they told me. But anyway, so there are things that can happen. I'm gonna calm down, and then Cecilia's gonna.
Yeah, I feel like you're reliving these experiences.
These are
Yeah,
traumatic, girl. These are
yeah,
traumatic
yeah,
dollars.
absolutely. I know. Well, um, I get at least a couple of little kind of uppers, a little bit, The check really is in the mail. We have to say that because, I mean, so many promises out there that really are not what they seem, right? But some escrow costs indeed are prorated, like the aforementioned property taxes, to make sure they don't, and so, or insurance, and some other little fees. You may have heard of people padding their budget to make sure that they have enough that they don't come up short, costs are estimated. And once the title transfer has been recorded, um, so yep, you made this little budget, but after they record the title and that's being transferred into your name, sometimes you do get a little check. And it may be, a couple $100. Now, in this case, this is a celebration moment because when that has happened for us, like, okay, this is a special dinner because, hey, not only did you just buy the home, but now you are off and running. So, let's, have that good moment before you start making those monthly payments. So
Start
then,
living adulting 101.
yeah, yeah. Now, this one is a little strange to me. I don't even know why this is allowed. About why would your lender rerun your credit after closing?
Mm,
Now, one of the reasons has been because people, they refrain from doing certain things. And, there's kind of a steady state moment because they're trying to get the loan approved. But then all of a sudden they're off on a buying spree. And there are, things that all of a sudden people probably need to be mindful of. Okay, things have changed because maybe you had some, furniture you wanted to buy. Um, in the case, say, well, this mine is a little bit different. Building a home, having had a few months, the way I characterized it was that yes, make your buying purchases and put them in storage. Like lights, we did an upper on the lights on the lighting allowance, for example. And so this is the adulting that I want to share. This is a little bit outside of what I'm saying, but the point is so that you don't run afoul with your credit score all of a sudden you're buying all these things. So yes, we had things to buy, but I was buying them along the way and putting them in storage. And until we, put those things in the house so that you don't have that, oh, now I gotta get back on budget again. So just one idea. But the point is, don't go crazy shopping. That's really the point. Because it's easy to do. You got a brand new home. Why not, right? So it's not the time to buy that BMW, Land Rover, or I don't know. It's a lot, all cars are expensive to me today. But anyway, you might want to think about that.
So the interesting thing about that is now I've had lenders tell me that, and that's why I know that they do it. But I'm like, we've signed a contract. So what if I do go open a new credit card? What are you going to do? So I don't, I mean, again, with that whole fine print situation, but
Yeah,
they're
right.
telling you this, don't run the credit, or excuse me, don't open any new credit lines
Right,
within
right.
30 days after you buy. But I'm like, people do that. And then secondarily, what happens if they do run your credit? That's what I don't know. But anyway,
Well,
blah blah.
that's right. That's the part.
Because there
And
is a
and to me,
contract. So what are they gonna
that's
do?
right. Right.
So anyway, that's
And as
interesting
long
to
as
me.
you're, yeah, paying your bills on time, you're getting credit for that. I mean, your bills and your mortgage. I find that almost stalking or
Mm,
illegal or shouldn't
mm-hmm.
be allowed.
Should be.
It's just
Mm-hmm.
ridiculous. I mean,
Mm.
so anywho, how about a homeowner's exemption, or here in Ohio, we call it homestead
Yeah,
exemption.
yeah.
And so there are several caveats to that where you can qualify, when I say caveats, categories, I should say, for a slight reduction in your assessed home value, conceptually reducing the amount of property taxes you pay. Not by much, but go for it. So, doing so could actually knock off, I'm just going to throw a number out there, $7,000 off the assessed value of your home. So you pay a few dollars less. It's not automatic. You do have to file for it. So, um, in Ohio, there's over 65, for example, or a disabled veteran, surviving spouse of a veteran. Those are some categories of where you can be offered a homestead exemption.
So what is the
And
dollar amount in Ohio?
um, I think it's moved up to $38,000.
What? Can I come to Ohio? We only get $7,000 in California. And I'm like, what is the point? Which I mean,
Yeah,
I'll take
yeah.
it, but
Well, I say that. So I think the value is well, I don't know if I know that number's in there where it's $38,000, but a percentage of that.
mm,
So that's how they figure that
I
out.
wonder if I should go back and look though for that age. I wonder if there's a different dollar amount, but 7,000 has been the max,
Uh-huh.
for even since I bought my first troublesome condo. But
Mhm.
anyway, it might be time for me to look at that again as well. I don't know if there's a different
Right.
dollar amount, but that's the max that I've ever heard.
Right. And there are a lot of people don't know about that.
I know. So
And
definitely
that's why we're
file,
talking
definitely look
about
it
it.
up. Yeah,
Yeah,
yeah.
whatever the amount is to me,
Take it.
hey, whatever dollars I want them, right?
Mm-hmm.
So, come on and tell us about the last one. Tell us about the last
Oh
one.
my gosh, we got to number 10 because we had so many
Yeah,
stories in there. I just didn't know what
yeah.
number we were on. But
Right,
number
right.
10, listen, gentle persons, you may have heard this word before, but you must check the fine print on your insurance policy. Now, depending on where you buy the home, certainly in Khalifa, flood insurance and earthquake insurance are generally not included on your homeowner policy. First of all, I hope you understand you have to have homeowners insurance. The lender will not lend to you without
That's right.
homeowners insurance. That's the first thing you need to know. And the second thing you need to know is we've talked about it ad nauseum. I know, but the what do you call those insurance companies are leaving California and Florida. Ohio still seems to be safe. I'm not coming to Ohio because of the snow, but y'all got a few good things going on. But anyway, so if you live in a designated flood zone, that will come out during your title search process. It will tell you there are certain areas that are designated as a 100-year flood, like, it could happen within 100 years. And then there are some that is going to flood every 15 minutes. I don't know what that one's called. I just know about the 100-year. But anyway, if your home is located in a flood zone, you will designated flood zone, you will be required to buy flood insurance. And I look at all these people who want to buy next to a river or a creek or lake. Thank you, no. First of
Mhm.
all, I'm not fond of mosquitoes, but you will have to buy flood insurance. Now, I will tell you what's not required necessarily is earthquake insurance, but you must be offered earthquake insurance, especially if you live near a fault line, which in scenic California we got plenty. Although I
Mhm.
will have to say I'm hearing more about random earthquakes happening in
Mhm.
odd
We
places
got
in
an
the
earthquake. That's
US.
right. That's right.
So you're not, just maybe it's just an undiscovered earthquake fault. But anyhow, in a way, you don't have to buy it, but you could buy it if you were concerned that your house might, not survive an earthquake. And the only reason I want to call those out no more is because they're not generally included. You have to buy them special. Excuse me, specifically, you have to get a rider for earthquake and or flood insurance, but they're horribly expensive. And as you know, the insurance companies, they love to collect, they just don't like to pay. So your deductible is going to make your eyes water. And that's why we want to bring that up to you. So it's frightfully
I
expensive,
may,
and you just need to
I
know.
know, yeah, I'm sorry. I know we're a little running over, but just a little plug here. Um, because veterans are important. And so there is a little benefit if you're a veteran, if you go through USAA, because um, we have our flood insurance through USAA. So it's cheaper. And so I think that's great to have, at least one benefit for veterans. So in case somebody didn't know that. And so it's reasonable.
So you guys, is it a creek, stream? What's that behind your house? Is that water?
Yeah, yeah. I was wondering if you were gonna bring. I started to bring it up, but the what's behind ours is I don't know what they call that, but there's a creek that flows, yes, through there. Hmm.
Uh, yeah, thank you. No.
And you've kind of seen, and they don't call this a flood zone,
Oh,
but
really?
you've seen what happened. You were
Mhm.
here last year, and we had water above, and it's like, okay, they don't call this a flood zone, but.
Yeah,
But
there's
we
so
have so
many.
many drains around here. There's drains
Yeah,
are built into all these properties. So that's, in fact,
yeah. They're planned for it, which is good.
yeah.
And let's agree that doesn't always happen. All
Mhm.
right, okay. Just wanted you to bring that to your attention if you have a concern. We got a bonus 10.1, 10.5. I don't know what to call it, but listen, you may be surprised to find your loan is sold almost immediatamente after close of escrow. Some lenders only specialize in loan origination. They just want to
Mhm.
collect the fees and move on. So they get the deal, they close the deal, and then they package it up and sell it. So your lender at close of escrow on the 15th will not necessarily be your lender on the first of the next month or the next 2 months. So your terms, however, will remain the same. So even though you get a new lender, you're just writing the check to someone different, but that doesn't mean they're going to change your terms.
Mhm.
Hopefully they'll be better at math than my lender is. Just thought I'd throw that out there. Okay. How surprised were you? Huh?
Yeah. If you weren't surprised, I would be surprised if you weren't surprised just a little bit. Okay. So how about that? I mean, this was a lot. It's a lot if not just this episode, but look at all the homeownership
Mm.
episodes. I mean, I know we've given you quite the handy little guide there. Buying a home is just the start. And as long as you do your homework and create a plan, you will come out on top. That's why we're here. That's our whole point is that you come out on top. And buying a home should be a good experience no matter what.
Well, I'm just gonna say that I think June has been fun. I know Cecilia thinks June has been fun too. And she's not in the biz, but she gets it. We hope you feel properly empowered and ready to confidently ask good questions before you buy a home. And so next month, good times continue. Our new topic is income diversification and systems because we want you to make bank. It is seriously all about the Benjamins. Get you some. So, with Divas, Diamonds, and Dollars podcast, you know that we empower career women, business owners, and late bloomers with the tools and strategies for living a bolder, fuller life. Each week, we talk business, leadership, and personal finance. So, we do hope that you follow us to get ahead and succeed at a higher level. And if you have enjoyed this episode, and we hope you have, because we probably spill the tea a little bit too much, and that's Larisa. She does that all the time. But anyway, do share this episode with a friend and do take a look back at our other June home ownership episodes. They will, serve you well. Did you have a thought?
Well, just in case we had somebody new, we always love new people. Just wanted to share that I'm Cecilia Benford,
And
and
you may
this
have
is,
noticed my name. I am Larisa Troche, and we are delighted that you have spent some time with us this week. We will see you next time. Cheers.